It turns into $37 million, all tax-free. She can use that money for whatever. Do they need a car? Do they need an apartment? Does she want to buy them a condo? Or does she want to invest in real estate? Whatever it is. So what she's going to do is she'll use that policy to fund the kids' college. Then she can pull that cash value out for their retirement. Mm-hmm. And then the policy will replenish itself by the time the kids are ready to retire. And now they have a legacy for their grandkids that aren't even born yet.
All right, welcome back once again to the Rock Your Gift podcast, where we operate in the space between art, business, and transformation. And today I have a powerful guest. Her name is Wendy Lyon, and she is a financial wizard. This woman has been able to help people who brought her $10,000 and turn it into over $1 billion. I think she said she did it 2 times. She's an international keynote speaker, soon to be best-selling author, and she is a powerhouse when it comes to helping people to be able to use their money wisely and be able to create a lot more wealth. So welcome, Wendy. So great to be with you.
Thank you so much for having me, Sean. This is going to be awesome. I'm excited.
Yeah, I'm really looking forward to it. So I would love to start off with a little bit of backstory. Tell us a little bit about yourself and how you got into doing what you're doing now.
Well, how I get into doing what I'm doing now is I found out how much I didn't know. And I was widowed when I was young. My husband was only 24. He died in a motorcycle accident. We had 2 little girls, 1 and 3 years old, and he had a whopping $20,000 of life insurance. It was it represented 6 months of his salary, that you get. It's like a free benefit that you get from your job. Well, he was 24. So just for easy math, let's say that he was going to retire at 64. So if he was making $40,000 a year back then, 40 years times $40,000 is $1.6 million. That's the economic hole that his death left behind. So what I really try to tell people is you are your most valuable asset. It's your ability to earn an income that first and foremost needs to be protected, because if you get a cancer diagnosis, a disability, or God forbid, a death, the economic impact that you leave behind on your family, whatever, you're going to consume all those other assets, be it a 401k or an IRA or your savings, whatever it might be, to fill in that economic gap that's been left behind. So I try to tell people, I learned the hard way so that you don't have to. So that is something that most people don't understand. And the way you can decide what your economic life value is, like what I just told you. Take what you make, multiply it by the number of years until you're going to retire, and that's how much protection or life insurance you should have in place to guard that. Because it's you. You are your most valuable asset. It's not your house. It's not your 401k. It's you.
So I want to talk about your genius zone and get a sense of how you found money to be your genius zone. Was there a time in your life where you just knew that this was your thing, or it was always easy for you? Or tell us a little bit about how you operate with your thinking around money and what lights you up about it, or what feels like it's in your zone of genius, if it is.
Well, I think I've been very, very good at multiplying money for people in business, individually, whether they were corporations or solopreneurs and so forth. And I multiplied their money. We had a conversation before where I took a company from $2,500 a month to $100,000 a month in just 6 months' time on a $99 a month advertising budget. So
right.
And I love to come alongside others and just propel them into the most success that they can enjoy. And it didn't stop there. The company kept growing and growing and growing. We had to move 3 times to get larger warehouses to handle all the inventory and all the shipping and all that kind of thing. So that's really my passion, is to come alongside people and to do that for them. And I really live by the creed that if I can help you, if there's something I can do to help you, I must help you. There's a scripture that says, do not withhold good from your hand when it's within your power to act. So if I know that you're not in the best position you can be in, and I don't want to insinuate myself into your life, you know what I mean? You have to want me to help you. But if I can help you, there's things that I can do for people that it blows their mind. I'll give you an example. I had one client. She's brilliant. She's a young doctor. She's actually the MD to NASA astronauts. And she was putting $500 a month for her two little kids into, one was only 6 months old and one was 2. And she was putting it into a 529 plan. And I said, there's a better way. You know, if you do this instead, let's just see what this would look like.
What's a 529 plan?
So a 529 plan is a college savings plan.
Gotcha.
The thing about a 529 plan is that A, it's taxable, and B, you can only use the savings towards expenses related to school. So I said, well, what if your kid needs an apartment or a car or something like that? That's not going to be covered by the regulations of a 529 plan. So instead of doing that, I said, well, let's just see. If we did this instead, let's just see what this would turn into. So by putting the same $500 a month into each kid's, we put it into a permanent life insurance policy that she'll pay into it till they're 21, because she can decide how long do you want to pay for it or put into this. So she'll put the money into till the kids turn 21. And so all in for the 6-month-old, she would put in like $147,000 in change. It turns into $37 million, all tax-free. And she can use that money for whatever. Do they need a car? Do they need an apartment? Does she want to buy them a condo? Or does she want to invest in real estate? Whatever it is. So there's a couple $100,000 waiting for the kids when they turn 18. Now remember, this isn't like a typical, like an IRA or a 401k where you can't access the money until you're 59 and a half without paying a 10% penalty. This is money she can use as soon as there's cash in the policy, that it's available for use. But the purpose of it was for college. Well, did the kids need $37 million in income? I don't think so. So what she's going to do is she'll use that policy to fund the kids' college. Then she can pull that cash value out for their retirement. And then the policy will replenish itself by the time the kids are ready to retire. And now they have a legacy for their grandkids that aren't even born yet. So one simple strategy funds the kids' retirement, the parents' retirement, the kids' college, and leaves a legacy. One simple strategy.
And that was to start putting in a certain amount of money every single month?
It's every month.
Every month for, what was it, like 20 years?
She decided that she would pay into it till the kids were 21.
And they were what age when?
The daughter was 6 months old and the son was 2 years old.
So about 20 years.
Yeah. So here's the thing is that the younger you start, the better off you are because of the time value of money. I turned, like you said in the introduction, I turned $10,000 into over $1 billion.
Yeah.
Well, this was a client of mine. Her son passed away, and he had 2 little girls, 2 and 6 years old. So, of course, that really resonated with me. And she said, I have $10,000 for each of them, similar to what my kids had, right? And nothing was blowing my hair back because I really want to get fabulous results for my clients. I don't want to be like, well, here's something we could do. This might be okay. Or, it's better than nothing. It's better than leaving it in savings or something. No, I want to blow my clients' hair back. So I thought out of the box and I thought, okay, what if we put this into this financial vehicle? And it was an annuity. But the kids are so young that throughout their life, it actually turns into $2.4 billion for the 2-year-old and $2.1 billion for the 6-year-old. But $1 billion is mind-blowing enough. So I usually don't say that. I just say we turned 10,000. And I had to fight for it because it's an out-of-the-box idea. So I was trying a number of other things. And like I said, I was just like, this doesn't really work for me. But when we did that, now it's like, now we're talking. Now we're cooking with fire.
Wow. That's incredible. So I guess I want to break that down a little bit more. What was the out the box element of that? What was different that you were doing?
Putting 2 little kids into an annuity.
That's not typical.
No,
hmm
no. I had to fight for it, let me tell
And
you.
how much did she need to put in?
That's it.
Just leave it, the
Yep.
10,000 for each?
Yep.
And over what period of time does it become that billion?
Oh, they have, I wish I had brought it with me so I could show you actual figures, but it's throughout the course of their life. But they have, I'll make it up, $800 million at the age of 65. I mean, you know what I mean? It's extraordinary. It's absolutely extraordinary.
And they can also pull that out and
Now,
use it?
this vehicle, you do have to be retirement age before
Got
you can
it.
access
So
it.
setting them up for retirement age.
Yes, but here's the thing, because the grandmother owns this, she is already at retirement age, so she can pull the money out
I see.
and use it on their behalf throughout their
Oh,
life.
okay.
Yeah,
Got you.
yeah.
Wow. So what do you say to somebody who's like, well, I really want to do this. Like, I really want to create this kind of stability for the future, but like, I don't make a lot of money and like, I don't know how to, how do I take more and put it somewhere when I'm not sure? Like, how do you handle that?
Well, we work with what you have,
hmm
okay? And simply by doing, I mean, you'd be amazed what just a little bit now can grow to in the future.
hmm
And so you're
49.
40, 49?
Yeah.
So you still have 15, maybe 17 years before you're going to be full retirement age, according to the Social Security Administration, right? You're 67 is full retirement age.
Right.
So we can grow that. Like we were talking about before the show, there's other opportunities that I have available where you can get a 500% return in like 2 months' time.
Yeah.
So there's other ways to do that. So maybe we take what you have now, get that 500% return, multiply
Then
that,
start putting
then
that.
put that into something and have that grow. You know what I mean?
Yeah.
But there's a lot of vehicles out there, and not to poo-poo other financial gurus out there, but the Dave Ramseys and the Susie Ormans of this world.
Yes.
For one thing, they kind of come from a scarcity mindset.
Yeah.
Like, oh, you have credit card debt? How dare you go to Starbucks? What are you thinking?
Right.
You know, that kind of thing.
Yeah.
And one of the early things that I learned was that, linear financial planning just doesn't work. So imagine you have a graph, right? And here's your interest rate on this side, and here is your age. And typically they'll say, well, if you put in, I'll make it up, $100,000 and you earn 8%, interest year after year after year, you're going to end up over here and you'll be fine.
Right.
But there's taxes, there's inflation, there's life events, and there's technology. And all of those things they make you tilt, right? So instead of ending up here, you end up way down here. And now you're 65 going, well, we're barely going to make it. I thought we were going to be great. You know what I mean?
Yes.
So that's very linear. So what I do is when I put a financial vehicle in your life, I make it so that if COVID happens, if you are disabled for 6 or 8 or, the average disability is 18 months, that these financial vehicles, these plans that we have in place are going to be able to withstand those things. So I had one client that he said he and his wife were expecting a baby, and they said, we want to start thinking about our future. And they were putting $150 a month into a permanent life insurance policy. And let me just back up. There's basically 2 kinds of life insurance. Well, there's 3 kinds of life insurance. You have term, which is temporary. So think of term like you're leasing an apartment. When your lease is up, you don't have anything coming to you, right? The lease is up, that's it. That's what term insurance is. And you typically get them for 10, 20, maybe even 30 years. Permanent life insurance, there's 2 kinds. There's whole life, which covers you for your whole entire life, right? It's more expensive because it's like the difference between renting an apartment and buying a home. But when you buy a home, what happens when you own a home? it grows in equity,
Mhm.
right? And then you have that equity that you can borrow from to make home improvements or whatever.
Right.
So that's permanent life insurance. Another kind is indexed universal life insurance. That is more affordable than whole life. It's more cost, it costs a little bit more than term.
Mhm.
And the reason being is because they know you're going to die. Term insurance, the actuarial tables, they're betting that you're not going to die during that term,
Mhm.
right? Unless you're like my husband and you die in a motorcycle accident or something, it would typically be a premature death where you would die during that term period.
Mhm.
So in that respect, now that's better to have than not, right? Because you're your most valuable asset. And if all you can afford or all your budget will tolerate is a term policy, then that's better
Okay.
to have that than not to have it,
Right.
right? But index universal life, the thing that's fabulous about that is your money is not in the stock market. It's not in the market.
Uh-huh.
But you choose indexes that the company offers. It could be the S&P 500. It could be Barclays. It could be PIMCO or Bloomberg or whatever, right? As those indexes perform, you get the benefit of how they performed.
Mhm.
So if an index does 8%, okay, well, you get credited 8%.
Mhm.
But if the market takes a downturn, if the market tanks like 2008 or
Yeah.
2001 or 2000, a number of times,
Yeah.
then zero is your hero. You never lose a dime.
Oh.
So you get the benefit of growth
Huh.
of the market, but you have no downside.
Oh, wow.
So rather than, like Dave Ramsey says, buy term insurance and invest the difference, this is a way to have life insurance and you get the benefit of investing, but there's no downside. Because when your money's in the market, it's at risk of the market. And this year especially, the markets look more like an EKG than some straight line like this, right?
Yeah.
So, and the thing that I'll just point this out. It's on my website, The Financial Lion, LYON.com. And on the bottom right corner, there's a video. And about 8 minutes in, I have a video of Dave Ramsey on Fox Business News. So you watch him and you probably think, well, what an authority. He's on Fox Business News. This guy knows what he's talking about. I should listen to what he says.
Right.
So he gives an example and he said, well, let's say you're 50 years old and your husband's making $50,000 a year. You just want to get like a policy, a term policy for $500,000. And so if he dies, you take that $500,000, you put in a good mutual fund earning 10% per year, and you've just replaced your husband's salary. Well, number one, what is the point of insurance? It's to indemnify. It's to make you whole. It's to make your life, at least financially, as if the death or the disability or the cancer diagnosis didn't happen, right? So if you're 50 and you're going to work till you're 65 or 67, why would you only want to replace 10 years of your income? So that's my head explosion number one. Right? You'd want to have, if he's making $50,000 a year and he's going to work till he's 65, well, you'd want $750,000 in life insurance, right? Or if you're going to work till you're 67, you'd want $850,000, not $500,000. So you've already cut yourself off at the knees just with that one decision.
Gotcha.
Second, show me a good mutual fund that earns 10% per year forever. Do tell. So, and then he says, so now your husband dies of a heart attack. And like I said, you put that money, that $500,000 into a good mutual fund earning 10% per year. Well, I had a software that does, zillions of calculations in the background. And so in this video, I put the $500,000 in, it's earning 10% per year. So it's going to throw off $50,000 a year, right? Well, if you're in mutual funds, you're probably not managing them yourselves, especially if you're just newly widowed, and probably, as in most couples, the husband is taking care of the finances. So just for argument's sake, let's say that the widow has her money being managed by Edward Jones or, whoever it might be.
Yeah.
Well, I just put in a 1% management fee, just a 1%. which is fair. Some people, charge 3. I know others that have charged 5. So 1% is fair. At 17 years, that money is gone. It's gone. So now this widow is 67 and she gets to go be a greeter at Walmart.
Right.
Because she listened to that advice.
Right.
And bear in mind, I didn't put in taxes, inflation, life events, or technology. None of that. That's just if life stays rosy and just the same.
Yeah.
And she's getting that 10% per year forever.
That's what
It's
Dave
gone.
Ramsey is recommending, is that people do that. And you said put into mutual funds, right? And so that your alternative to that is what you were just talking about with regard to life insurance?
So if you want the growth of the market without any downside, plus all these other benefits, these policies have chronic illness riders. They have disability riders. They have all these other added benefits that mutual funds don't offer. You know what I mean? If you have your money in stock. And I'm not saying not to invest in the stock market. I mean, you want a diversification and all that fun stuff. And there's some really great, look, if you invested in Bitcoin, you'd be a gazillionaire. I just met with a client the other day, and his son has a friend that invested in Bitcoin when it was a nickel. A nickel. So he's like a trillionaire. So I'm not saying that permanent life insurance is the only answer. There's plenty of other things out there, but mainstream media and the mainstream, financial gurus never talk about this stuff. So that's why I do what I do, because no one else is telling anyone these things. When my client put her money into an index universal life instead of a college fund, she was like, how come I've never heard of this before? So this is why I do this, to get the word out and say there is another way. There are options out there. There's not just the 401k, the IRA, and the 529 plan for your financial future. So I started to tell you about a client, and he was going to put $150 a month into permanent life insurance. And about a year later, or not even a year later, it was about 6 months later, and now they were going to get married. So he said, I don't want to pay in my policy for 6 months. I want to save for our marriage. There was already enough cash in his policy to pay for itself for those 6 months, so he could save that money. So that's what I mean, where we want to put you into something that's going to withstand COVID and life events. And, my kid's going to get married. I need to fund college. My car needs a transmission. Whatever it might be, this is cash that you can access. And the best part about it is that when you want to borrow against your life insurance policy. So say I have $1 million life insurance policy, a permanent policy, and there's $500,000 in cash in it, or I've borrowed $500,000 in cash. I never have to pay that back. It is the only place on the planet where you can get what's called a non-recourse loan. What that means is if you don't pay that money back, your credit score doesn't get dinged, you don't have collection agents calling you. When I pass away, what I've borrowed from that policy is going to be deducted from the death benefit. So I'm just leaving less behind.
I see. So
that's another brilliant way that you can access cash and you don't have to pay it back. So did you know that existed, 5 minutes ago? Probably not.
I've been investigating this. I haven't heard about the mutual or the, what was the second kind of permanent?
Index,
I'd never heard of that. I'd heard of whole versus term and, been in conversations with people about it and learning more about this idea of infinite banking.
Yes. Become your own banker, because you could borrow the money, pay it back, borrow it again. Yep.
Yeah. So I'm definitely kind of becoming more and more educated on it. I think that it's clear to me that either whole or index are the right ways to go with it. One person I talked to recently, now this is a good friend of mine. He's a money coach. He is not the same kind of money. He works with millennials, and he's not advising them on these kind of wealth growth strategies that you teach. He's looking at, he was trained by Dave Ramsey. He went through all of that. And so, It's really good stuff. I love it because for me, you know, I've spent a lot of my life spending money, not really thinking about, you know, I'm making money, spending money, not really thinking about the future.
Well, we're all 10 feet tall and bulletproof, you know, when we're young, right?
Then I got, you know, I turned 49 this year and had this sort of like wake up call going,
oh,
I'm not a kid anymore and I've got kids and I better start thinking smart because, and so, you know, part of where he gives me advice is about basically being very restrictive, like being very like careful. And I have this ability to go into a very abundant mindset where it's like, I know I can make money so I can invest. And actually that can create opportunity. Like I'll end up making more money because of that mindset than like being restrictive and feeling like I'm tight. I can't say yes to this. I can't say yes to that. But, you know, there's a part of me that feels like, you know, like a parent, like I need that responsible person telling me I can't do this because left my own devices, like I don't have anybody to kind of tell me those things. So I'm just wondering, because one of the things that he was saying about, I'm wondering your take on that perspective that he brings, but also he was talking about life insurance just recently, and he was saying the only thing about it is that you have to really be on top of it. Like you cannot let it lapse or any kind of thing like that. So I would just love to hear like your take on what I shared about.
Well, typically they're going to withdraw the funds automatically out of your account each month.
Right.
And what I always do with my clients is if they don't make a payment, I get notified by the company. So say they change banks and they just space it. Oh, I forgot to let them know I have a different bank account or whatever. I get notified. So of course I immediately call my client and go, you know, what's going on with that kind of thing. And I'm glad that you brought up lapse, because when I gave you the example of borrowing the money from the policy and you don't have to pay it back, etc., it's always tax-free unless you let the policy lapse.
I see.
Then what you've taken out of it will be taxable as income.
So there's some serious consequences to being like,
but we're not going to put something in place and you're going to pay on it for 3 months
I mean,
and go,
it doesn't
well,
make
the heck with that.
sense
You know what I mean?
that.
No,
That's
we're in this for the long term.
Right. If you're going to do something that's about setting yourself for the future, to me, you should be, you know, dotting your I's and crossing your T's, because that's the whole point.
Right.
That you're like, doing it right finally.
But I'm not a one and done anyways. My clients and I become friends. We hang out. We always have birthdays together. We celebrate Christmas together. And each year in the example of Index Universal Life, I get notified by the company, hey, your client has a policy anniversary coming up. And that's when we revisit, okay, you selected these indexes last year. How did they do? Do we like them? Were there other indexes that are performing better now? Let's switch it. So unlike a mortgage where you're locked in for 30 years, you know, at whatever rate you have, these are flexible. So the policy grows with you, and I help you with all of that. I'm not going to go, oh, well, thank you very much. See you later. Bye. It's like, no. Okay. That's just the beginning. That's just the beginning. So, and like I said, and it's idiot proof, because with Index Universal Life, I was going on looking at how all my clients' policies were performing, you know, all the time to make sure they're always in the best possible position. And now I just get notified, hey, this index is up. And here's what's beautiful about it too, is unlike the market, in these policies, the company that I place these with, because they're just awesome, and I'm appointed with over 50 companies, so I leave no stone unturned. Believe me, I'm going to find the best bang for my client's buck. But with this one particular company, you can lock the index in. So I get notified, hey, let's say your money was in, I'll say Bloomberg. S&P 500 would probably be the most. So I'll just say S&P 500 because most people are familiar with that.
Right.
So let's say the S&P 500 goes up to 8%. You can lock the index in at 8% so that you know you're going to be credited 8% for that whole year. Wouldn't it be nice if you could do that with the stock market?
Yeah, right.
Oh, my stock went up to $25 and I only paid $15. Let's lock it into $25. I'm good with that. So this is another aspect or benefit of putting your money into vehicles like this, because now you have control. You can change the index from year to year. Now, when I said if you lock it in at 8%, if the index drops to 2, you'll still get 8.
Right.
But if the index goes to 12, you still get
You
8.
missed that, yeah.
But you still have that control. And remember, this is all tax-free. So add 15% capital gains tax onto that 8%. You know what I mean?
Yeah.
So now you're
Yeah.
really making 23%.
Right.
And not to muddy the waters, but there's other benefits in there and other multipliers. So I have a client, and so there's indexes that have as high as 180%. It's called a participation rate, which means that you take that 8%, you multiply it by another 180%, and then there's another option in the policy where you multiply it by another 40%. You do pay 1% for that additional 40% bonus. But with all these other multipliers, that 8% turns into, it's fine. I can't do the math in my head right now, but you can
it's a
imagine.
lot. Yeah.
Take 8%, multiply it by 180, and multiply it by another net 39% with. So it goes on and on. That's how I can multiply money and make millionaires out of just everyday ordinary people.
That's amazing. What do you say when people are coming to you or you're talking to somebody and they have a lot of debt and like that's like a big burden on their back and they want to build wealth, but like first they feel like they've got to like clear this out, or what's your take on all that?
Oh, I'm so glad you brought that up, because Americans have, I want to say it's now $1.8 trillion in debt, and 37, I just read the stats for 2025, but 37 trillion in household debt. I mean, it's just off the charts. I just wrote an article for Brains Magazine about 5 tools to ditch debt and build wealth. So maybe if I had had more coffee this morning, I could recall it all. But I would encourage you and your listeners to go to Brains Magazine and read that article. And also with college, student loan debt, because although they didn't have to pay anything during COVID, well, now they do. And they're like, oh my gosh. And, I really have compassion for the younger generation that they're angry. I can't afford an apartment. I can't buy a house with interest rates so high, which I don't know why they're high. Europe has lowered their interest rates 9 times. Ours should be down around 2% right now, and they're not. But I have a software that won the Ernst & Young Entrepreneur of the Year award back in 2008. And it's like a financial GPS system, if you will. And it gets people out of debt. It has factorial math. So each debt has 3 factors. So you have the amount, the interest rate, and the monthly payment.
Right.
So by the time you have about 8 debts, which could easily add up, I have a car payment, I have a mortgage, I've got 3 credit cards, I've got student loans. By the time you get to like 8 debts, it's not 3 plus 3 plus 3.
Right.
It's 3 times 3 times 3 times 3 times 3.
Right.
Now, this software is running like 56,000 different calculations in the background to get you out of debt in the fastest, most efficient way possible.
Nice.
So I have a client, I'll just give you an example, and these are all on my website as well. They had bought a house back in, it doesn't matter. They had a 30-year mortgage. So they had bought it 5 years previously, and they had several credit cards, but they were going to be paying on these credit cards and their mortgage for, their mortgage at least for another 25 years. So we simply put in their income and their expenses, and they're largely living on Social Security. They're going to be out of debt in 4.5 years. Like, mind-blowing.
Wow.
Right? So I love to blow my clients' minds and go. And you should see the grins. They're like, what? We're going to be debt-free in retirement. Oh my gosh. And that just happens routinely. And it's not, people are like, is this magic, Wendy? Like, how is that even possible? It gives you the month and year that you'll be debt-free. So wouldn't it be awesome to know, instead of being out of debt in 2045, I'm going to be debt-free in, 2029 in May. So the light at the end of the tunnel is no longer an oncoming train. I mean, it's just, that's why I love what I do.
I love that. You love
it.
that.
Absolutely
and I think that it's such a a comforting thing for somebody to, be in your presence and, for you to have all this experience and for you to have all this confidence in what you do. And, there's a lot of fear, there's a lot of uncertainty, there's a lot of years of, it going in the other direction, being around people who are also fearful. So to be in the presence of somebody that, has confidence in how you can get into a better situation, has confidence in how you can create your future, wealth goals faster than you thought possible. And, just this vibe of you really caring about people. That's awesome. I really appreciate that. It's really great. So what haven't we talked about? I would love to know something that you feel like you would love to share. Like we talked about demystifying some of these things with these like gurus. You've been doing this a long time. What's something else that would really be helpful for our listeners to know about in terms of like wealth, growing money, or anything that you think that would be supportive of them if they want to be more successful?
Yeah. Well, you know what? I love that you brought up your mindset, that you have the mindset that you can make more money because the mindset is where the money is made. Yes. So I just wrote a book called How to Live Like a Rock Star.
That's right.
Tour bus optional.
Yes.
And the first chapter is all about mindset because if you have a scarcity mindset, I'll never be enough. I'll never have enough. I don't deserve it. I'm not worthy of this. Because I'll tell you, I had one client where she had a 401k from a prior job and it was $260,000 and I turned it into $7.2 million in income. And it just keeps good. The longer she lives, the more income she'll pull out of it. And instead of going, where do I sign? She's like, well, so that's where I have to go. What's holding you back? Do you think if you have all this money that people are going to come after you? Oh, millionaires are bad. How many throats did you step on, to get to where you are today? Or, the taxes or, all that kind of stuff. So mindset is everything. And what I love about the system that I mentioned, like the financial GPS, is you don't have to change your budget or lifestyle, not one iota. So I don't have clients living off of rice and beans and, drinking weak tea to get to their financial freedom. You know what I mean? So, but mindset really is everything. And until you believe that you do deserve it, that this is possible and that this, have that abundance. And even if people are thinking, well, I don't need $1 million. Well, you know what? Think of the good you could do with $1 million.
What about the people that you can help with
there's
that?
Plenty of people that are hungry in the world. There's a person dies every 20 seconds of waterborne diseases. How about drilling a well in a country that doesn't have fresh, clean drinking water? How about that? So use it as a tool for good. Exactly. So even if you don't need it all or your house is paid off or you're doing fine, how about helping somebody else?
I love that. I think the thing that I want to ask you about is for people who are entrepreneurs, it's a very, it's an awesome road because, it's kind of up to you how much you make. You're not capped by some kind of paycheck. But there's also the uncertainty of, where's the next client coming from or, whatever the various, variables are inside of that. What is your advice for somebody who's an entrepreneur and they want to move as quickly as possible towards the financial freedom, but they're juggling a lot of things. They have debt. They have, this uncertainty about, how much money they can make each month. So there's this variations and they don't have a lot in savings, but they really want to take things next level. I know they need to have the right mindset. Tell us what would be your fast track plan? I know you would need to know how much money they're making and sort of get into the reality of it. But just kind of how do you handle entrepreneurs and uncertainty and not a lot of in the money, saved up and they're just sort of living kind of month to month,
Well, you know what? One of the things that I do, and I've told you that when I put a financial plan in place, we want that to withstand life's curveballs, right? Because I'm the poster child for life's curveballs. I've had 7 car accidents, 7 surgeries, 7 potentially fatal illnesses. I've even been hit by a truck. Okay. Wow. So if our retirement can stay secure amidst all of that stuff, I promise that yours can too. But It's like a building block. So let's start from somewhere.
Mhm.
You know,
Mhm.
as an entrepreneur, we don't watch the clock, but we need to imitate the clock and just keep going
Mhm.
forward, right?
Yeah.
So you start with one piece
Mhm.
and then we build on that and then we build on that and we build on that.
Mhm.
So, but if you don't start,
Yeah.
nothing's going to
Nothing gonna
happen. So
happen,
the
right.
important thing is
Yeah.
to start, to just put that one
Yes.
foot forward.
Okay.
And I always stress with my clients that I'm a no judgment zone. You know, I
Mhm.
have been through it. I've been there,
Mhm.
done that. My current husband that I have now,
Mhm.
we married in 2000 and we both lost our incomes on the same day, not once, but twice.
Wow.
And once it even involved our home because that was part of my husband's compensation. So I've had, you know, my utility bills come in pink envelopes and played roulette with, well, if I pay this bill on the 29th day, I won't get a 30-day late.
Right.
You know, I've been there and done that.
Uh-huh.
But if we could come back from that,
Yeah.
from starting from nothing,
Yeah.
and have a secure retirement
Mhm.
waiting for us in
Yeah.
the future, imagine what you could do just starting from something.
That's so good.
So I want to give you hope, okay? It's not too late, Sean. I promise it's not too late. We can do something, even
I
if it's
love
a
that.
little bit.
I think hope is so important. You know, it is really like, you know, for me, I've done a lot of work on articulating my genius zone. I've been working with this coach that helps me identify what she calls your divine coordinates. They're these words that are kind of what you're here for. So for me, it's about self-actualization. It's about inspiration. It's about dynamic expression. And then it's about possibility. And one of the things that, you know, she talks to me a lot about that I think about is like, if I feel like I don't have possibility, like I don't have options,
Right.
like I close down.
Yeah.
But when I feel like I have possibility, it's like it's like a spectrum where it's like I get really excited. Like
Yes.
I feel like anything is possible, and it can be a little bit like I'll say yes to everything, but when it's closed, I say no. It's like
Right.
I have to find this, but
Yeah.
possibility and
Yes.
and belief of hopefulness is like my favorite thing. Like, you know, without it, like everything gets dark. With it. So, you know, just being able to know, you know, for the listeners, for anybody going through something where you feel like it's too late for me, I made a lot of mistakes, I have a lot of shame about the things that I've done in my past, you know, I don't feel like, you know, I've set myself well up, you know, that there is a way, there is a possibility, there is a hope that you can, and you know, that's an incredible thing to leave people with from this episode. We have a few more minutes, and I would love for you to share, number one, like, you know, where people can go to get in touch with you. And then anything else. I think, you know, you talk about your book, How to Live Like a Rock Star, or Tour Bus Not Included.
Tour Bus Optional.
You know, anything around that, because, you know, I have a background as a rapper and an artist. And so I love that whole idea. Where did that
you
come
just
from?
go with your bad self, Sean.
You know, I want to know more about that. But one thing I will say before you share is make sure you guys subscribe if you're getting value from this show. This is a lot of people need to hear this. So let the word out and subscribe and share it with your friends. And I'll pass it back to you.
Well, you know, I do want to say something. Planning for your financial future can be simple. It's not some complicated, oh my gosh, I have to bring in 3 years of tax returns and look at all my investments in my Edward Jones account or whatever it might be. I'll tell you something for your you said that you have a friend that coaches millennials.
Yeah.
I'll make it as simple as possible. If you're 20 years old and you start saving $13 a month, you will have $1 million by the age of 67.
$13 a month?
$13 a month. 1-3.
If you're a millennial,
1-3.
say it one more
13,
time and slow it down. They need to.
If you're 20 years old and you start saving $13 a month, you will have $1 million by the time you're 67. So if you want $2 million, save $26. If you want $3 million, save $39. My grandkids are out this week, as you well know, and one of them is 18. One is 10 and one is 12. And the 12-year-old said, well, I try to save $100 a month, you know, from all my allowance and, you know, this and that and the other thing. I was like, you go, girl. You're going to be a multi-millionaire.
Wow.
And that's not putting it in, an account earning 4.5% or 5%. That's just saving $13 a month. So let's just simplify all that right now. Everybody just take a deep breath and go, I can do that. That's simple. So that's the first thing, is that I don't want anyone to feel overwhelmed, or this is too much for me, or I don't know what I don't know. And, I'm afraid.
Yeah.
Just face everything and rise. Kick that fear to the curb and just do something. Like I said, just take the first step. And about the book, How to Live Like a Rock Star, Tour Bus Optional, I'll tell you something funny, because I use Bruce Springsteen as an example in the book, because he always wanted to be a rock star, and he had his little guitar, and his mom borrowed money to get him a guitar and everything. Well, the reason I chose him is because when he did his Born to Run album, which came out, he was on the cover of Time magazine in November of 1975. And there's a picture in that magazine of my brother, Mo Jackson, who changed his name from Craig Lyon to Mo Jackson because he didn't think that sounded like a blues musician. And my friend Rick Seguso, who was Bruce's road manager. And so it's Rick Seguso, my brother Mo, and Bruce Springsteen. And there's a picture of them riding on a tour bus on the way to the next gig. So before the book comes out, I have to get permission from Time magazine to use that picture.
That's
So
right.
that's what's holding up the book right now.
That's
but
good.
as soon as I have that,
I love it.
that'll be out. But so what I'm going to do with that, because I don't want people to read the book and go, okay, well, that was nice. I want them to take action. So there's 10 chapters in the book where we just build layer upon layer of how to build your financial freedom. And I'm going to turn that into coaching, where I can do group coaching and really take you by the hand and go, come with me. I'm here to help you. I love you. I want you to be financially free, and we can do this together.
That sounds amazing. I'm excited for your book, and I'm really glad that we've connected and that you joined me on the show. So how do people find out more about you? How do they find you if they want to connect?
Well, they can go to the Financial Lion, Lyon, my last name, thefinanciallion.com. And, it's all about know, like, and trust. There's plenty of videos on there. If you go to thefinanciallion.com/schedule, we did an infomercial, and I talk about, my story, what I've done, the hardships, the wonderful things that I've done for my clients. So you can learn all about me. But, this is who I am. I don't change. I'm not different when I walk out the door. What you see is what you get. So get on my calendar and let's just have a conversation.
All right. Well, you heard it from her. Get on her calendar, have a conversation, take your financial freedom seriously, make it happen. This has been a powerful episode, and I look forward to seeing you on the next episode of the Rock Your Gift podcast. See you then. Peace.